Stacker here. So, how low can the price of silver go? We have seen a bit of a correction in the price of the precious metals over the past few days, and I'm sure that this is a question that is on many stackers' minds. So, we're going to examine that today, and also we'll get into some recent developments in the global economy and in the geopolitical situation that lead me to believe that no matter how low the price of silver goes in the short term, ultimately it is destined to move much higher. And if you are in the mood to buy the recent dip in the price of silver, make sure you check out today's video sponsor, stbullion.com. Right now, new customers can get gold or silver at spot by visiting stbullion.com/news. So check them out with the link down in the description. Okay, so how low can silver go? Well, this is a chart here on TradingView that we've looked at in a few recent videos, and it shows the long-term downward trend line in the price of silver going back to the 2011 high. And you can see also we've got this cup and handle pattern that is forming, and right now silver is trading within this downward channel, this handle of the cup and handle, if you will. And if we take a look at this range, which silver has been bouncing around within, we can kind of get an idea of how low silver might go in the event of an even sharper downturn. Now today, actually got a little bit of a bump in the price of silver, but the daily price moves kind of just noise, but these patterns on the long-term chart are definitely something that we want to pay attention to. So let's say that we get some mega deflationary crash. I mean, that is kind of what the downward move in the price of silver over the past couple days has been about. Fear of a global deflationary event, a global economic downturn. And, to be honest, I mean, those fears are not entirely unfounded. We've got inflation around the world, especially here in the West, continuing to soar out of control. China has got some economic woes of its own. Its property sector may decline. They've kind of embarked on some stimulus there. Doesn't seem to be taking effect quite yet. And global energy prices also are soaring. That could be the final straw that kind of tips this, global economy over the edge. We could see some serious downside as a result of all of these factors. And so that largely had to do with why the price of silver and gold were selling off and why the US dollar index was rising. So if you look at this downward channel, I mean, you can kind of get an idea of where silver could go if we get some kind of a major black swan event, some kind of a major deflationary event. I think you could see the price of silver, at least the paper price, dropping down to maybe the $15, $16 level. That's what this chart is telling us. And, if it violates that lower trend line, well, then I guess all bets are off, and maybe the cup and handle pattern are violated. We won't be breaking above this trend anytime soon, but I think the chances of that are highly unlikely. Even back in 2020, mother of all sell-off, silver dropped down to about the $12 level, and when you consider all of the inflation that we've had since then, a decline to the $16 level would be of about the same magnitude. So that's kind of the worst case scenario, if you ask me. A decline to 16 bucks, 15 bucks, and I don't know about you, but I wouldn't be horribly disappointed by a move like that. I've got some dry powder. I would love to add to my stack and bring down my dollar cost average. I mean, I'd be buying hand over fist if, of course, physical metal ever actually dropped to that price. I think that is highly unlikely. I think that what we'd probably see if we did see a big sell-off in the price of silver is that the premiums on physical would explode. And of course, that's unfortunate for those of us who would like to pick up some metal at a discount. It's good though, in a sense, if you're a stacker and the asset you're holding, not the paper silver, that's what the spot price represents, of course, but the physical metal probably won't drop at all if we see a big sell-off. In fact, I mean, the physical metal might actually be in the green in a sense if you see premiums explode and the price of a physical ounce of silver just kind of detaches from the paper markets. But let's talk about why, even in the event of a major deflationary crisis, probably going to ultimately see higher prices for both silver and gold and for, physical assets across the board, whether that be oil or energy, any of these kind of inflation hedging real assets that are denominated in fiat paper currency. Here's a story which I think is pretty interesting, but it's pretty indicative of what the central bank game is going to be moving forward. This is from Reuters from just a couple days ago. The Polish central bank stunned markets with a 75 basis point rate cut, causing the Polish currency to plummet relative to the euro and the dollar. And, this is a pretty shocking move. Why? Well, because inflation in Poland is still north of 10%. So why is the central bank cutting? Well, a lot of it has to do with the fact that there's an election coming up there. So, these central banks, they're supposed to not be political entities, but I think we all know that they are strongly aligned with whoever the ruling party is. I mean, yeah, here in the US, the Fed is supposed to have this air of independence, but of course, the head of the Fed gets appointed by the president. And I think folks like Jerome Powell, they'll do whatever they need to do to get reappointed. They want the job, they like the job. So they play political ball. And if they don't, they get replaced with somebody who does. And I expect the situation in Poland is very similar. So pretty shocking that they're cutting by 75 basis points, though. Prior to that meeting, there were a few analysts who said maybe there was an outside chance of a 25 basis point rate cut, but instead they shocked everybody with this 75 basis point rate cut. And I suspect that here in the US, eventually we're going to get some kind of a similar move by the Fed. Whether it be because we've got an election coming up or because we have some kind of a massive economic downturn and the Fed has to stimulate. On that note, we've got New York Fed President John Williams recently stating that currently U.S. monetary policy is in a good place. And this is an indication that moving forward, we may see the Fed pause their series of rate hikes. I mean, that's probably a good idea considering how weak the U.S. economy has become and the fact that, we're really not set up to deal with higher rates. We've got debt of all sorts ballooning out of control, credit card debt over $1 trillion, national debt, which we're going to get into here in just a moment, now up to $32.9 trillion. So more rate hikes, yeah, it might help tame inflation, I guess, although good luck with that in light of the fact that energy supplies are becoming so tight around the world. We got crude oil spiking up to the highest level in 10 months this year on these Saudi and Russian oil production cuts. And there's more to that, actually, in a story I want to get into. This story from Bloomberg that was published just recently. Russia plans to cut sea diesel flow by a quarter this month. So not only are they reducing their oil production, they're cutting their exports of refined fuels out of Russia. And Russia exports a lot of diesel fuel. But they're having domestic fuel shortages. And also, they're going through some refinery maintenance. And so they're cutting their diesel exports by a quarter. And so this is going to cause global energy markets, which are tightening in a very significant way, to tighten even further. Excuse me. And you can probably expect more protectionism of this sort. I mean, this is very similar to the export ban on rice that we're seeing out of India. Excuse me. Let me wet my whistle here. There we go. Much better. So yeah, India cutting, their rice exports because they're trying to keep domestic food prices low. Now Russia is trying to keep their domestic fuel prices low. Sorry, folks. I'm getting over a second bout of the virus, which must not be named. It's going around. I'm kind of on the tail end of it now, but apologize for this obnoxious coughing. I wish I could stop it. So we got analysts on Wall Street from RBC Capital Markets now forecasting that global oil prices are likely to hit triple digits, saying it's not their base case, but they're not ruling it out, and they're seeing it being increasingly likely that we will see, excuse me, global oil prices soaring to the triple digits, hitting over $100. And I can tell you that if that happens, the likelihood of a significant deflationary event will be very high, increasing drastically, because oil, it's an input cost for just about everything in the economy. We're about to see inflation tick back up. We're going to get the August CPI numbers coming out on September 13th. It is forecast that the headline CPI will be ticking up to 3.8%. Core CPI, I believe, is forecast to decline. We'll have to see what happens, but either way, the inflation numbers, especially the ones that consumers are feeling, because, food, energy, those are some of the things that consumers feel the most. Those are absolutely heading back up. And if you're tuning into this live stream, by the way, please do give it a big thumbs up. I appreciate you tuning in. If you find this information helpful, that's one of the things you can do to support this channel and help get this information out. And also in the chat, put it in the chat, whatever your local fuel prices are. It's interesting to see this. We're seeing gasoline prices tick up across the country. And this is going to be a thing that really pinches an already overdone U.S. consumer. We're seeing consumer spending beginning to contract. The consumer is in dire straits. $1 trillion in credit card debt, absolutely astonishing. And now high gas prices are likely to potentially be the finishing touch for U.S. consumers. And so, the U.S. economy is on the verge of some kind of a major deflationary event. We're ripe for it with the amount of debt that we have. And the response to that event, I believe, is going to send the precious metals sky high and send the dollar plummeting. Here's another sign that the U.S. economy is in dire straits, and that these interest rate hikes, not only are they going to have to pause, like John Williams tells us, but they are likely going to have to be cut, almost guaranteed. This is the interest payments on the U.S. national debt spiking up in an absolutely exponential manner. There is no way this is sustainable. And not only is the Fed raising rates, I mean, that's partially responsible for this, but the deficit spending, I talk about this a lot, but it is absolutely out of control. We have got the U.S. national debt now at $32.9 trillion. And I mean, it seems like every time I look at this site, the U.S. debt clock, we're adding another digit. The third place there is just tick, tick, tick. Soon we'll be at 33 trillion and then moving on. I got John Williamson in the chat here saying, do I trade silver? No, typically no. I mean, I have in the past. I've bought and sold some mining stocks, some ETFs, but for the most part, I stack physical. I do own some mining stocks, but with those things, I tend to just buy them and then kind of forget about them, because I think those are very undervalued assets, a little more speculative than physical metal. I mean, after all, physical metal really is just money. I mean, silver is obviously money, right? This is a $half coin. This was literally circulating currency in the United States. And for most of the U.S. monetary history, our money actually was composed of gold and silver. I mean, this coin was minted, 1944. So back in 1944, if you had pocket change, it was made of silver. But these days we've got some clad counterfeit stuff. They just put nickel on it on some copper and tell you it's money, but it's not. It's just currency. But look at the U.S. deficit here, $2.079 trillion, the actual deficit. And as if that is not shocking enough, look at this. This is data from the Treasury here, the Debt to the Penny website. Pretty cool website, actually, provided by the Treasury. I mean, this is absolutely stunning, these numbers. So if you scroll down here, they tell you every day, they'll give you an update on the debt. And, okay, I got Ann Williams saying, if the inflation goes to 3.8, why won't the Fed increase the rate to try to curb inflation? Well, before we get into this data, I do want to answer that question and address that. They may very well hike the rate to try to fight inflation. But, I got a question for you, Ann. How's that working out for them so far? Because the thing is that the Fed's attempts to fight inflation, while the U.S. federal government runs deficits of the magnitude that they are, it's like putting a Band-Aid on a gunshot wound. It's not possible. I mean, inflation is a monetary phenomenon. Sure, there are supply-demand factors such as, the Russians and the Saudis trying to put the squeeze on us by cutting their oil production. But ultimately, it's because the Fed, monetized nearly $9 trillion worth of debt. Ann says, we all know it doesn't make sense, but none of their strategies do because they won't take the route that will work. Right, yeah, cutting spending, austerity, balancing the budget. They're never going to do that. There's no political will for it. Any politician who tries it will get voted out of office because ultimately, we're doing this to ourselves. And the reason I don't think that they'll be hiking rates much longer is because something's going to break in this economy, whether it's commercial real estate, whether it is the interest on the national debt just absolutely soaring, whether it be a contraction in GDP and a real recession kicking in here. I mean, we're already in a recession. This economy has been hollowed out, but it'll get to the point where they can't even cook the numbers to paint a pretty picture about it. And at that point, there will have to be more stimulus. Maybe there will be more checks going out. I wouldn't be surprised if we get some kind of stagflationary collapse, and the government tells us eventually that more inflation is good for us. If you got debt, hey, you'll be able to pay it off with devalued currency. I really think that's coming. I think that we'll see that over the next several years, that we'll see headlines like, oh, why inflation is so good for you. If you're a homeowner, hey, your house is worth $1 million now. It was worth $100,000 last year. If you've got credit card debt, which a lot of people have, those people will think it's great. Like, hey, I can pay off all my debt with devalued currency. I mean, of course, this is just kind of wealth redistribution. It is a hidden tax. It is terrible for the U.S. economy, and especially for the little guy. The wealthy with huge amounts of assets, they'll get the wealth effect, and they'll be able to pay off their debts with devalued currency. Whereas, you and me, we're going to be stuck spending $500 to take a trip to the grocery store, to buy some beans and rice to try to stave off starvation. I mean, really, I do think it'll end up coming to that on the path that we're on. So this data from the Treasury, the debt to the penny, you can see this is from September 6th, the most recent data. Total, so you got the debt held by the public, then the intragovernmental holdings, that's like foreign holders of U.S. Treasuries. Total public debt outstanding as of September 6th, 32.903 trillion. And then I want to go back just 1 month to give you an idea of how fast this is expanding. So we'll go back to August 7th, 1 month prior, 32.611 trillion. So basically, you've got just under $300 billion added to the total national debt in a 30-day period. It's about $1 billion a day. If you annualize this rate of deficit spending, you come up with not a $2 trillion annual deficit, but a $3.5 trillion annual deficit. And when you keep that in mind, that it took, I think, 206 years to accrue the first $1 trillion in the U.S. national debt, and now we're doing that just about every 3 months. I mean, it's truly a shocking figure. And should we see a massive recession, which I think we are on the verge of, this deficit is going to explode that much further because tax receipts will be eviscerated. You get an economic downturn, you get less government revenue, so that means higher deficits. And also, look what happened in 2020 when we had a massive recession. I mean, to be fair, that one was kind of brought on by the government and by official policy. But nonetheless, we saw it, and we had this massive amount of government intervention. We had the Fed monetizing something like $4 trillion worth of debt in a very short period of time, slashing interest rates to 0%. And of course, when you think about how much deficit spending we are undergoing right now, and how much we are likely to experience in the event of an economic crisis, and then you look at this chart, you can understand why the Fed is going to be forced to slash rates. I mean, they'll be forced to come into the market and intervene in the Treasury market, probably with QE. I mean, they won't call it QE, I'm sure. Who knows? They'll come up with some name for it, like the Bank Term Funding Program, that we had in March. But it'll be QE, just by another name. And they will be monetizing debt because this is not sustainable now. And, we got almost $1 trillion in interest payments. Imagine when the deficits absolutely go bananas. You're running like a $6 trillion, $7 trillion annual deficit. I mean, I wouldn't rule that out in the event of some kind of a massive economic crisis, which, again, we are ripe for. It's just going to take one black swan, and we are not prepared for it. We are barely treading water, and we haven't even had one of those yet. And what could that be? Well, I don't know. I mean, you've got the BRICS talking about dumping the U.S. dollar. You've got the ASEAN nations, the Southeast Asian nations, they're dumping the dollar for their bilateral trade. You got India buying oil from the UAE in rupees. You got Saudi Arabia joining the BRICS in January, along with the UAE and Iran. Iran's got a gold-backed stable coin currency that they're talking about using for international settlements. So, I mean, you do the math. I don't know exactly which one of these events is going to be the black swan that rocks the dollar boat, but there's plenty of candidates for what it will ultimately be. And again, these aren't even really black swans. These are the gray rhinoceroses. These are the things that are obviously going to occur that we're ignoring. But, the black swan is something you can't predict. So we got someone in the chat here saying maybe you have some idea on what asset you might look for during that time. As I understand, the window is relatively short. A house is low-hanging fruit. Certain business types, what does well? Yeah, I understand what you're saying. So you're saying, should we see some kind of an economic crash and then the price of the precious metals spikes up? What kind of an asset do you look to move into from your precious metals? Well, I mean, for starters, you probably do want to hold some of your precious metals because it's possible that we may just have to go into a new economic paradigm. The dollar could be toast. I'm not saying that's guaranteed, but it's certainly a possibility. But I would say whatever looks good and has future prospects and becomes very cheap. It could be businesses, it could be energy, it could be real estate. It'll be things that people need. It won't be Louis Vuitton handbags. I can tell you that much. It'll be things that are absolutely essential. Maybe utilities, places that provide clean water, things that people will just have to buy because the economic status of most of the people in the West, I think, when this comes to pass, is going to decline. It's not going to be a lot of money for extras, but people will still have to buy things like energy and clean water and food, those things with inelastic demand. Like, how much can you cut your food budget before you starve? So I think that those, maybe farmland, I don't know. Time will tell, right? We'll be able to spot those deals as they manifest themselves, but it'll be for those who are prepared with hard assets who will have the first crack at getting the best deal on those things. And, this is the yield on the 10-year treasury. Okay, we've got a 40-year a 40-year bull market in U.S. treasuries that is coming to an end here. You've got the yield on them declining over the past 40 years since the 1980s, but for the past 3 years or so, we've seen them moving back up. Now, everything in the economy is cyclical. This was bound to end eventually, but that is what's happening. And remember, when bonds sell off or the supply of bonds increases dramatically, the yield has to increase if the demand for them doesn't increase commensurate to that increase in supply. Like when you see a sell-off in the bond market, the yields go up. And this is part of why the interest cost from the U.S. on the U.S. national debt is skyrocketing. Now, why are these moving up? Well, part of it is all the deficit spending. The U.S. is selling this massive amount of treasuries onto the market to finance all of this deficit spending. At the same time, you've got the Fed with their quantitative tightening selling bonds. You've got foreign holders of U.S. Treasury debt like China and Japan. They're selling it off to defend their currencies. And the Chinese selling off their treasuries because, hey, they're worried about getting sanctioned, right? They don't want all of their treasury holdings to get frozen. They saw what happened to Russia. So, I mean, there's all these factors that are playing into this rise in U.S. Treasury yields. Also, the end of the petrodollar. Petrodollar profits, OPEC nations, they sell their oil for U.S. dollars, and then they roll over those profits into U.S. treasuries. Well, that's all coming to an end. And so, unless we get our economic house in order, we cut all of this deficit spending, which I don't think is going to happen. It's very low probability. Maybe ultimately we'll be forced to, but there's going to be a lot of reckoning to be had before that day comes. The Fed is going to have to come in and be the buyer of last resort. They're going to have to monetize all of this debt. There's no way that we can let the yield on treasuries continue to soar like it has over the past 3 years. When you look at this chart, the interest payments, I mean, how much are we going to pay in interest on the U.S. national debt? Are we ready to pay $2 trillion, $3 trillion, $4 trillion annually? I mean, it's already on pace to become one of the biggest items on the national budget, on the federal budget. And, clearly there's only so high that can go before the Fed is forced to intervene and bring these rates down. But when they do, when the Fed cuts rates, just like, the Central Bank of Poland did, I think that what the Central Bank of Poland just did is very likely a premonition of what the Fed is ultimately going to do. Central banks, they love to stimulate. They love to cut rates. That's like the one tool they have, really. I mean, they tell us that their objective is to maintain price stability. And according to the Fed, that means 2% increases in prices annually. I don't know how that's stability, but that's what they tell us. But in reality, their goal is to destroy the currency. It is to transfer wealth to their cronies, to the wealthy in society. I mean, look at the Fed's track record here. Been around for about 110 years now, since 1913, and look at how much they have devalued the currency. Something like 97% of the dollar's purchasing power has been lost. It might be more than that now. Considering the inflation that we've had over the past couple of years, I wouldn't be surprised if now the figure is 98 to 99% of the dollar's purchasing power has been erased. And that's not an accident. And it's also, part of their long-term plan. So, they give you a lot of good lip service. They tell you that they're trying to help the economy out, that they're concerned about the little guy and inflation, but they're not. That's all lip service. It's all propaganda. I got someone in the chat there saying congrats on 51,000 subs. Yeah, thank you so much. Thank you to all of you. If you're a subscriber, I really appreciate it. I didn't really comment on that, but we did hit 50,000 subs fairly recently. So a huge thank you to all of you who subscribe. Well on our way to 100,000, and that'll be great because that you get the silver plaque, which will be my favorite one. I don't know what 50,000 is. Maybe that's like a copper plaque. I know they don't give you anything for 50,000, but it is cool. And I figured that would be like the copper level. Of course, a million is when you get gold on YouTube. But yeah, I couldn't do that without all of you. So if you haven't subscribed yet, help me get to 100. Please do smash that like button, click that subscribe button. And I had some people comment about how they weren't getting notifications for these live streams. Well, you click the little bell notification icon there and make sure your notifications are on for your YouTube app if you want to be clued into these. I don't do these on like a real regular schedule. I try to squeeze them in here and there where I can. So sorry that it's not on a more regular schedule, but I do always appreciate all of you who join. Rahul Goyo says, love from India. Yeah, hey, folks in India, pretty smart. They've been stacking precious metals for a long time, especially gold, but I know there are some silver bugs over there as well, so they've got the right idea. I remember reading somewhere that folks in India, private families hold something like 25,000 tons of gold. It's like 4 or 5 times the amount that the U.S. official holdings are, so pretty amazing. And, when the global economy resets, there are going to be a lot of folks in places like India who do very well for themselves. And in the U.S., I think that the stackers, will have a big advantage when this mess all collapses, which is, imminent. Think about it. The dollar has been the world reserve currency since 1971, so 52 years. That's a pretty long run for a purely fiat currency. And remember, this is really the only time in world history that we've been on a completely global fiat currency standard. And you hear a lot of stuff about the U.S. dollar index when it goes up and it goes down. That's only relative to other fiat currencies. So the whole world is on the verge of an economic shakeup. We're in a fourth turning. The current world order was established about 80 years ago following the Second World War. And every 80 years or so, if you follow the generational theory of Strauss and Howe, and I mean, this is borne out by history, you get some kind of a major shakeup in the world order. And so that's what we're headed towards here. And, there's a reason that central banks around the world are acquiring gold at a record pace. There's a reason that places like Iran and the BRICS nations are talking about using gold and they're de-dollarizing. And, you got to wake up and smell the coffee here because you're not going to hear it from the mainstream media. I mean, they're going to be on damage control until the last moment. Like I said, this is a prediction I have not heard other people make, but it is one I'm almost sure we'll see someday, and that is that the mainstream media, when inflation really kicks in, and as it inevitably will, I believe, whether that be, following a deflationary collapse or what have you, I think that we will have the talking heads singing the praise of inflation and how great it is for the economy. I'd like to know what you think about that forecast, and how ridiculous will the propaganda machine, the financial propaganda machine, really get as we hit, this end game. We got Supreme Ginger Stacker saying, I just hit 270 subs. Well, congratulations, man. I haven't actually checked out your channel yet, but I'll make sure to check it out. And Yeah, so that's why, even if the price of silver drops down to 16 bucks, personally, I would love it. I'd love to be able to stack up some silver at a low price. If it hits 16 bucks, I'll be backing up the truck. It's not financial advice, it's just what I'll be doing. But even the pullback we've had over the past couple of days, I think, is a real good opportunity to get your hands on some hard assets, especially if you don't have any. If I didn't have some hard assets, if I didn't have a good stack already, and we were heading into this time, I would be a lot more nervous. But I sleep great at night because, yeah, I have some cash in a bank account and all that stuff, but I've also got some hard assets, and I don't have to worry about this stuff getting inflated away, because of the decision of some central banker somewhere. I don't have to worry about a surprise 75 basis point cut like the folks in Poland. I mean, if you're in Poland and you've got a bunch of, I'm not sure how to pronounce their currency, the zloty, perhaps. If you got a bunch of zloty in your bank account and this is the news you wake up to, and then all of a sudden your currency has devalued by like 5% overnight, that's kind of a rude awakening. That's a rough thing to wake up to. And you could be like the folks in Cyprus who got bailed in by their banks, and things like that are probably coming here to the U.S. as well. I mean, the criminality of the financial system really knows no bounds, and you want some assets without the counterparty risk, and that's gold and silver. They've been money for a long time, thousands and thousands of years, much longer than any fiat currency. Central bankers can't control this stuff. That's why they hate it. There's a reason that they use the paper markets to manipulate this stuff. And it's because, if folks woke up and they understood the reality of what's going on in the financial system, the dollar would likely be toast. And I think that realization is coming. You can ignore reality, but you can't ignore the consequences of reality, as Ayn Rand once said, of ignoring reality. And I think we're getting to that point here fairly soon. And, it's just going to have to wait and see how it plays out. But I will be stacking silver. Steve says America literally hates silver. Well, I'm American and I love silver. So give the video a thumbs up if you love silver too. And good luck everybody out there. Get ready for much higher prices across the board. Get ready for energy to move up, and get ready for inflation and economic crisis, because I think we are on the cusp of it. But let me know what you think in the comments down below, everybody. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.